In today's show, I'll be sharing the 5 things to watch out for in the Bitcoin market this week. Calvin pop shares. The fear hasn't been so low since May's crash. The sentiment is literally comparable to a funeral, and I like it. And as Plan B illustrates here, Bitcoin status, you can see the bears suffocating the Bitcoin bulls. And as Will and Clemente shares here, for what it's worth, my base case is that we consolidate / range till end of year, carve out a regime of mixed negative funding rate / premium before bullish Q1, and Danny Scott updates us here. This Bitcoin dip was not driven by sentiment. It was driven by gamblers leveraging and being liquidated. Sentiment is still very bullish, and Rec Capital shares Bitcoin weekly closes above the red level. However, it looks like Bitcoin is going to attempt another retest attempt of the macro flag at 46,700 in an effort to form a higher low relative to last week's low. Also in today's show, virtual land in the Metaverse dominated NFT sales over the past week. That's right, we're talking about over $300 million in NFT sales as the Metaverse continues booming. Also in today's show, top crypto analyst says Ethereum rival prime for price explosion, with ETH itself set for a monster rally. Quoting him right here, ETH/BTC breaking out of a multi-month reaccumulation on a market-wide dump seems pretty bullish. For alts, in my opinion, 0.1 BTC and then 0.14 BTC will come sooner than people think. Imagine thinking this is a bear market. Also in today's show, we'll be taking a look at the overall crypto market. As you can see, Bitcoin, Ether, and all the major alts are currently correcting back in the red. But where's the Bitcoin price? Likely to go next. Find out all this, plus so much more, in today's show. Here at Crypto News Alerts, I drop a brand new episode every single day. The goal is to get to 100,000 subscribers. If you like getting that crypto, be sure to smash that subscribe button and ring that bell to turn on all notifications to receive daily premium crypto news alerts every single day, just like this. And real quick, before I kick off today's show, today's episode is brought to you by iTrust Capital, the #1 crypto IRA provider in America, which currently has over $3.5 billion in transaction volume. Now, when it comes to trading crypto, tax-free, look no further than iTrust. Not only can you trade the top cryptos, including Bitcoin, Ethereum, you can also trade physical gold and silver. And yes, they have military-grade security wallets backed by Coinbase custody with a $320 million insurance policy. And they have a special promo they're running right now, where if you sign up today using my referral link in the description right down below, you're going to receive $100 as a funding reward in BTC, absolutely free, truly making this a no-brainer. Also like to point out that there are no setup fees as well as no monthly fees. So go ahead and click my referral link in the description right down below, set up your tax-free crypto IRA account today and claim your $100 in free BTC, and let's start stacking those sats tax-free. All right, welcome back to another episode of Crypto News Alerts. I'm your host, JV. How's it going, crypto fam? Holla at your boy in the live chat. And let me know your thoughts on these new anime graphic designs here on my channel, along with my new avatar. Are you feeling it? Yes or no? But all right, now let's break down our first story of the day. Bitcoin starts the week off with traders still digesting the impact of the last major price drop that at one point saw $41,900. Now for the 5 things to watch out for in the Bitcoin market this week. Number 1, ranging into bullish Q1 2022. That's right, after nearing $50,000 earlier this weekend, Bitcoin is now back around 48,500 at the time of this recording, but still down 16% in a week and against all-time highs of 69,000. The maximum loss overnight on Friday is so far 39%, significant, yet by no means record-breaking in Bitcoin terms. And as Tech Dev shares here on Crypto Twitter, 40% corrections and then 2-week RSI floor breaks. In 2013, we had 4 40% corrections with 1 bear confirmed. In 2017, we had 7 with 1 bear confirmed. And in 2021, so far, we had 6 with 0 bears confirmed, excluding March of 2020, as you can see here in this chart. Now, as price predictions dry up, attention is now focusing on revival in 2022. As on-chain analyst Will and Clemente shares here, for what it's worth, my base case is that we consolidate / range till end of year, carve out a regime of mixed negative funding rate / premiums before bullish Q1. I've been saying I think this extends out into 2022 for months. Go back and listen to my weekly videos with Pomp, etc. And yes, I did have a positive outlook on Q4 of this year. Started off strong, but I think funds have been hesitant to risk on due to the macro, plus sitting on large unrealized profits and losses. And lastly, yes, on-chain supply dynamics are bullish. On-chain equals macro, in my opinion. Just because you look at on-chain doesn't mean you are gated off from looking at other data. I was talking about derivatives data and likelihood of a flush for days, plus in the newsletter leading up to the recent event. And a focus on the sustainability of price recovery will be derivatives markets after their cascade of position liquidations. As pointed out here, yesterday's liquidation cascade was the second largest single day event of 2021 in Bitcoin terms, bested only by the May 19th crash in sheer size, as you can see right here. Friday's events managed to somewhat reset open interest on Bitcoin futures to levels last seen in September at similar price levels to the pit of the dip. Now for the second factor to keep your eyes out on this week in the Bitcoin market is the new CPI data. That's right, macro markets are already on a knife edge, but this week may add some familiar fuel to the fire in the form of fresh consumer price index, better known as CPI data. Due for November, United States CPI readings are tipped to outstrip even October's shock of 6.2%. Year-on-year reading. Economist prognosis were noted by Lynn Alden, financial commentator and founder of Lynn Alden Investment Strategy. She added that housing, a lagging indicator not as present last month, would likely be a factor in the results, as she shares here. Economists on average expect next week's CPI print for what happened in November to be 6.7% year over year, up from 6.2% in the month prior, and for the month-over-month print to be 0.0%, down from the month prior's 0.09%. We all know that the inflation is actually much higher. This is just what they're willing to admit. I agree with Lynn Alden. I feel real estate is a better indicator of inflation. And on Zillow, it shows real estate prices climbing about 30% year over year. And I feel that trend is likely to continue. Inflation already hit the headlines again last week after Jerome Powell, chair of the Federal Reserve, appeared to imply that transitory was no longer an apt description of it. So they're finally admitting that inflation is not transitory, as we've been talking about for a very long time. Now, Bitcoin immediately reacted, and the bulls were keenly eyeing the new CPI data in a hope of a similar knee-jerk response to that from October. The cryptocurrency, despite recent volatility, is argued to be the best possible workaround for purchasing power protection, at least as inflation is in fact much higher when assets are not covered by CPI are factored in. And quoting Michael Saylor right here, everyone has double-digit inflation if they measure it correctly and needs Bitcoin more than they realize. I agree 100%. Michael Saylor, a well-known CPI critic in Bitcoin circles, warned late last month. Meanwhile, central bank money printing continue to go brrr, notably by the Fed, recently attracted public criticism from the head of another sovereign state, as President Nayib Bukele shares here in response to Jerome Powell saying they're going to retire the word transitory. Can you guys just stop printing more money? You're just going to make things worse. Really, it's a no-brainer. Now for the third factor to keep your eyes out on this week in the Bitcoin market, mind the gap. Bitcoin faces a giant futures gap this week, one so large that it may not close immediately, but traders should not forget about it. As crypto analyst Calvin A. Pop shares here, there's going to be a massive CME gap to 53,500 later today. Quite often, like 99% of the time, they close at some point, at least an important level to watch in the coming weeks if the market continues to bounce for Bitcoin. And he also shares here, the fear hasn't been so low since May's crash. The sentiment is literally comparable to a funeral, and I like it. And before I break down our fourth and fifth factor to keep your eyes out on this week in the Bitcoin market, as well as virtual land in the Metaverse, dominated NFT sales over the past week. But first, let's take a quick look at the overall crypto market. As you can see, everything is currently in the red and correcting, with Bitcoin down about 2% for the day, trading just above $48,500. We have Ether down 4%, trading just above $4,000. Solana down 7.5%, trading at $183. Avalanche down almost 9%, trading at $85.62. Polkadot down 8%, trading at $26.44. And Cardano down 5%, trading at $1.31. Now for the fourth factor to keep your eyes out on this week, fresh echoes of March 2020 as sentiment hits 5-month lows. That's right, despite just being months after September's price wobble, last week's mayhem is drawing the most comparisons to the events of March of 2020, which totaled over a 20% correction. And as Dan Crypto points out here, Bitcoin is looking like a miniature version of the March 2020 crash. So far, very striking similarities. And if history is to repeat, it's followed by a parabolic rally. So let's freaking go. Now, one key difference lies in market composition. 18 months ago, leveraged traders and their influence on the markets were a much smaller phenomenon. As Danny Scott points out here, this Bitcoin dip was not driven by sentiment. It was driven by gamblers leveraging and being liquidated. Sentiment is still very bullish. And the Crypto Greed and Fear Index does not lie. It shows we're currently rated a 16 out of 100 in extreme fear, which is the lowest score we have seen since July. Yesterday was an 18, last week a 33, and last month a 71 in greed. And now for the fifth and final factor to keep your eyes out on this week in the Bitcoin market is hash rate de facto at all-time highs. And as you know, the Bitcoin price follows the hash rate. So this is a solid bullish network fundamental. The panic among spot traders and doomsday mainstream press headlines made no dent in Bitcoin's key network activity, underscoring miners' long-term perspective. Even a dip to 42,000 was not enough to compromise the performance, and the hash rate, a measure of the computing power dedicated to the network, remains near all-time highs, as pointed out right here. Highest hash rate since April. Let's freaking go. Now, different estimates give different definitions of what was really the highest ever Bitcoin hash rate tally. According to popular mining pool stats resource, the hash rate is at its highest ever sustained levels, as you can see right here in this chart. And blockchain 7-day average currently stands at 162 exahashes per second. Meanwhile, 18 exahashes per second off the pre-China crackdown record in May. And regardless, the popular mantra remains that spot price action inevitably follows trends in hash rate. That's right, and difficulty, which keeps Bitcoin in balance regardless of the hash rate changes, is now set to increase by just under 1% in 6 days' time. Now, previously, this metric was slated to decline for a second period run-in. And before I break down our next story of the day, virtual land in the Metaverse dominated NFT sales over the past week, as well as top crypto analyst says Ethereum rival primed for price explosion, with Ethereum itself set for a monster rally. But first, let's take a quick look at the overall crypto market cap, sitting just under $2.2 trillion with about $124 billion in volume in the past 24 hours. And the current Bitcoin dominance is 41.2%, with the Ether dominance at 21.6%. And checking out the top gainers within the top 100, we only have one coin today in the green out of the top 100, excluding stable coins, and that's Waves, up 1.5%, trading just under $20, as virtually every major crypto is currently correcting and in the red. Now, which altcoins are you currently most bullish on during Q4 of this bull run? Let me know in the comments right down below. But all right, now let's break down our next story of the day. Digital land is in high demand in what is already a highly lucrative market, as the past week's NFT and Metaverse sales figures revealed. Data from industry metrics platform nonfungible.com indicates that there has been more than $300 million in NFT sales over the past week. Of that, almost a quarter has been for digital land in the sandbox Metaverse. And over the past week, each one of the top 10 NFT Metaverse sales across the top 5 collections were for in-game digital land. Now, the sandbox traded at a total volume of $70.5 million for 4,433 assets over the past week alone, making it the Metaverse collection that raked in the most cash. How many of you are currently bullish on the sandbox? Let me know in the comments right down below. And although Decentraland, which is the #1 Metaverse crypto by market cap, ranked in second place for total volume traded, the top 10 most expensive Metaverse NFT sales during the past week, ranging from 225,000 mana, valued at 758,000, to 50,000 mana, valued at 220,000, were all on the Ethereum-based virtual world. Decentraland traded 6.6 million in volume for 399 assets over the past week. How many of you are bullish on Decentraland/Mana? Holla at your boy in the live chat. Meanwhile, over the past 7 days, Crypto Voxels traded around 650,000 in volume for 81 assets. Somnium Space traded 492,000 for 40 assets, and Superworld traded 227,000 for 506 assets. All of their top trades were also for virtual land. Now, the Metaverse is an immersive virtual reality experience of the internet that uses blockchain technology and NFTs to pay and own items online. For example, when you make an in-game purchase, you actually own the item and are free to hold, trade, or sell it. And according to DApp Radar, $106 million worth of Metaverse land was sold among more than 6,000 traders in the week ending on Thursday. Undoubtedly, Metaverse land is the next big hit in the NFT space, outputting record sales numbers and constantly increasing NFT prices. Virtual worlds are now new top commodities in the crypto space. Now check this out. In June, a virtual real estate investment firm broke Decentraland's record for the most expensive digital land plot ever sold after spending $913,000 on 259 parcels. Crazy, as this virtual land is becoming more expensive than physical land. And on NFT marketplace OpenSea, Sandbox and Decentraland held their spots as the top 2 collections traded on the platform over the past week. And checking out the market cap of the Metaverse, we're currently sitting at about $38 billion, down 14% for the day, with trading volume near $9 billion. And as you can see, we have Decentraland, the biggest metaverse token with just above a $6 billion market cap, followed by Axie Infinity with a $6 billion market cap as well, followed by the Sandbox with a $4.6 billion market cap, currently trading at $5.04. But all right, before I break down our final story of the day, top crypto analyst says Ethereum rival primed for a price explosion with Ether itself set for a monster rally. But first, I want to remind you to smash that show more button right below this video in the description for a detailed analysis of what's going on in the crypto market. This goes for all 990 plus videos right here on my YouTube channel. Also, some very helpful resources for you to plug into, including my daily letter, which goes out to over 30,000 subscribers every single day. To subscribe, visit letter.cryptonewsalerts.net. Also, have a blog I update daily, which can be found at cryptonewsyes.com. Also, be sure to smash that subscribe button and ring that bell to help me get to 100,000 subs. And of course, you can follow me on all the major podcasting platforms. We're currently receiving over 500,000 downloads per month. You can find me on Spotify, the home of the Joe Rogan Experience, or Apple's iTunes, or Google Play. You can also follow me on crypto Twitter. My Twitter handle is crypto news. Yes. And of course, you can follow me on TikTok, Telegram, and Facebook. So wherever you're at, be sure to follow me there. But all right, now let's break down our final story of the day. A popular crypto strategist and trader says Ethereum is primed for an epic rally and predicts that another smart contract platform is poised for a price eruption. The synonymous trader known in the industry as Smart Contractor tells his almost 200,000 Twitter followers that Ethereum is primed for a monster rally against BTC after the pair broke out from a large bullish continuation pattern. Quoting him here, ETH/BTC breaking out of a multi-month reaccumulation on a market-wide dump seems pretty bullish for alts, in my opinion. 0.1 BTC valued at $4,885 and then 0.14 BTC valued at $6,839 will come sooner than people think. Imagine thinking this is the bear market, and at the time this was published, ETH/BTC was trading at 0.086, worth $4,200. Now, Smart Contractor is also bullish on Ethereum against the US dollar. Prior to last week's deep crypto correction, the crypto strategist predicted that Ethereum will correct all the way down to 3,600. With the pullback out of the way, Smart Contractor now believes that Ethereum is now ready to rally to new record highs, as he shares right here. Long the capitulation between 3.6 and 3.8 thousand, I think we can proceed to new all-time highs now. And another altcoin on the traders list is smart contract platform and Ethereum competitor Avalanche, aka AVAX. According to Smart Contractor, AVAX is now primed to rally to a fresh all-time high against the US dollar and Bitcoin after successfully retesting key areas of demand in both pairs. As he shares here, savage dumps across the board, but picked up some AVAX here. Super hard to pull the trigger after such savagery, but it has to be done, as you can see here in this chart. And also, he told us that AVAX could soar as high as $160 this month. It can climb above 0.025 BTC, which is $122, and his Bitcoin pair within that same time frame. Also like to point out that macro guru Raoul Pal is predicting a $15,000 Ethereum price before the end of this year and 40,000 per ETH by summer 2022. Let me know if you agree or disagree with the macro guru. Now for a quick recap of what I covered with you here in today's show. I shared the 5 things to watch out for in the Bitcoin market this week. We also discussed virtual land in the metaverse dominated the NFT sales over the past week with over $300 million in sales. Also in today's show, we discussed top crypto analyst says Ethereum rival Avalanche prime for price explosion with Ethereum itself set for a monster rally. But where do you feel the Bitcoin price is likely to go next? Let me know in the comments right down below. Now for the top 3 comments from yesterday's episode. Pokemon wrote, "Hi JV, thanks for the shout out. Thanks also to the Crypto News Alerts fam for shout outs. I like what you said, JV. I give sage advice. Oh my gosh, you are kidding me? Serious. I know, sweet F all. That is why I watch people like yourself who know what's really going on. I look for the consensus, and if the boys and gals are in the know, agree. I follow them. Anything I say about crypto is not original. I got it from somewhere. How I run my portfolio is original, I suppose. Take care. God bless you and yours. God bless the Crypto News Alerts fam. The good news, fam, is that 1 Bitcoin is still equal to 1 Bitcoin. So hodl." And our next featured comment comes from Chris, who wrote, "Sold some gold to buy the freaking dip. Bitcoin had 5 corrections this year of at least 20%. If equities, bonds, derivatives, and real estate had a 20% correction, think of the politics, CEOs, governments, and banks that would have to be involved to correct the market. Bitcoin just keeps going on with no outside help. This is truly how amazing this technology is. Touche. Great point, Chris. Nothing can stop BTC. Time reveals all. hodl. Now for our third and final featured comment comes from Wild Bill. Does anyone believe these moon predictions anymore? Seriously, the macro economy is so sketchy. How could any prediction be taken seriously? My response, predictions are for the future, not the now. Patience, young grasshopper. Thanks for tuning in. Much appreciated. And to be featured on tomorrow's episode, drop me a comment right down below. Well, that's going to conclude today's show. As always, I appreciate you tuning in and journeying along with me inside this incredible crypto matrix. If you gain value out of today's show, be sure to smash that subscribe button and ring that bell to turn on all notifications and help me get to 100,000 subs. And I look forward to seeing you on tomorrow's episode. Peace.